Charles Biossi. I'm the director for ConsenSys in Asia Pacific. And what we see at ConsenSys, we are a leading blockchain engineering company focusing on Ethereum development. Is really a full pace growth of the space from both the DeFi side. The developers are growing more and more in terms of community and developing more and more with mature tools. But we see also a very strong push from the governments in general, as well as the world of enterprise. And that's something which many people have been waiting for some time. It's if you've been in the industry for a while, you've been through the early adopters curve, and you maybe have felt at some point that it was a bit early in the market. I think this time is behind us now, and there is really a very strong demand from central banks, for example, with the hot topic that is CBDCs, central bank digital currencies, and the enterprises in general, especially the industry of finance, is definitely pulling the technology, building beyond proof of concept. So it's a very exciting time, and I'm sure we're going to have a very vivid conversation today during the panel.
Absolutely. So, ladies and gentlemen, also as Charles just started and gave the introduction, I'd like some opening notes even from our other panelists. First up, Pranav. Pranav, if you could have your opening notes on this topic, we'd love to hear that. Over to you, Pranav.
I think, so first of all, thank you very much for this amazing opportunity. And I think it has become that category wherein, I mean, you can hate it, you can love it, but you got to speak about it, So I think, so these are very interesting times. And clearly, as Charles also mentioned that, I think there is a lot of there's a lot of conversations going on in various corridors, whether it is startups, a lot of exciting stuff happening there. We have a bunch of them here. Of course, legal fraternity, regulators, and institutional players. Elon Musk, bought about 1.5 billion worth. Then there are others, who speak about it as a perfect storm, tulip mania, etc. So I think this is basically I think opening up various conversations, sort of creating a true globalization that all of us thought at one point, wherein there could be teams globally which could collaborate, create futuristic applications, transfer value in a borderless way. So it is definitely creating a challenge for regulators and various people to make sense of this new world and sort of build mechanisms to regulate, to monitor, to participate. So interesting times. Thank you for the opportunity.
Absolutely. Thank you so much, Pranav. Well, ladies and gentlemen, we do have a moderator, Sharat, online right now. Sharat, I was just asking our key panelists. First up, I asked Charles and Pranav for their opening statement on the incredible topic, and Jaideep and Kumar, Gaurav are left. So if you could, conduct it further, I have, taken your spot for the last few minutes. I hope you didn't mind that. And but I'd rightfully give you your spot of being the moderator for this panel discussion. Over to you, Sharat.
Thanks, Bhavna, and sorry for joining late. I think this has been a pretty exciting week, as Pranav was saying that for the simple reason that Elon Musk made an investment of $1.5 billion in Bitcoin. It has given a bull run to the digital asset space, and it has also created a discourse around regulation. So the ECB chairman, European Central Bank, she was saying that there has to be a global regulation around Bitcoin. And in the current parliament session, we have a bill which talks about banning private cryptocurrencies, but it also talks about the need for creating an RBI digital currency. So I would like to kickstart the discussion by putting the first question to Jaideep, the legal expert here, and seek his views, what he thinks, what are the ways cryptocurrencies can be regulated. And because most of us would agree that a blanket ban isn't going to be doing any wonders to the industry, right? So what are the ways cryptocurrencies can be regulated, and can we regulate it as an asset class as compared to a currency itself?
Got it. Thanks, Sharat, and hello to all the panelists, all the attendees. Happy to join and weigh in on the legal and policy aspects. Yes, the first kind of headline I would say is regulate, don't prohibit. Now, of course, the text of the bill is not out in the public domain, So we don't know exactly the contours of the bill, but if we are going based on the draft bill that was published 2 years ago, then there would be a ban even on holding or transferring any cryptocurrency other than the official state digital currency. So as you mentioned, that's a very extreme step. In fact, even the Ministry of Electronics and Information Technology, which published its draft blockchain strategy recently, even they have recognized that public blockchains present a lot of benefits, and they have cited various use cases based on the Ethereum blockchain. And Ethereum, of course, requires Ether to run. So one wonders how the blockchain strategy would pan out if even holding Ether becomes banned under the draft bill. So for various reasons, including constitutional reasons, where it would be too extreme a measure, as we've seen the Supreme Court has interfered where the RBI measure was too extreme, as well as India's interest to be an emerging technology hub and promote innovation, etc. It would go against the tide of current of the global developments. For a mixture of reasons, prohibition is not desirable. Cryptocurrency is a platform technology like the internet. It can be used for good and bad. And countries have always dealt with platform technologies by regulating it. Now, we as a firm have made various suggestions on how this space can be regulated. The first step would be to regulate the intermediaries, which is the exchanges and the wallet providers. They, of course, many of them are already responsible, and Kumar is here, he'll share more on the best practices. But they, at least all the major exchanges do KYC, they verify their customers, they cooperate with law enforcement, they file taxes, they don't accept cash transactions. So they in fact give a window to the government into the industry and help create more oversight into the industry. Now, if the government can formalize these norms, the same way it regulates banks, stock exchanges, payment system providers, etc., if it can regulate the crypto asset intermediaries, that will bring a complete visibility and legitimacy to the industry and also protect consumers. So happy to go into more detail as we go along, but that's what I would broadly say on this.
Thanks, Jaideep. And since you talked about Ether, right, and most of the discussions around digital assets are also driven by stable coins, where I would like to bring in Charles and seek his views, because most of the DeFi is built on 70% of DeFi is built on the Ethereum ecosystem. And in certain ways, DeFi has also propelled a discussion towards central bank digital currencies. And since Charles, you are associated with a couple of CBDC projects, I would like to understand from you, what are some of the motivations or drivers for central banks to explore central bank digital currencies? And what are some of the risks which the central banks are looking at, depending upon their jurisdictions?
Absolutely, thank you, Sharat. I think there was some a lot of work done by central banks over the years on blockchain in general, in digital asset at the beginning. But what was really a wake-up call was Libra, this Facebook initiative, which really accelerated the work of many central banks today. So if you look at the data from BIS, the Bank of International Settlement, which sits on the top of all global regulators, they estimate roughly about 80% of central banks working today on CBDCs. So there is two avenues these central banks are exploring. The first one is wholesale CBDC, which in a way is kind of the first path, in some way also maybe the easiest path. So wholesale CBDCs really look at the use of CBDCs between central banks and commercial banks, and how this can be optimized and kind of changing the pipes over there. Some other central banks have been pushing forward the topic and are already working on retail CBDCs. The big retail CBDC project is obviously the PBOC one, which started named as DCP, which is now renamed at ECNY. And it's really looking at enabling and kind of renovating the payment industry within China with the use of CBDCs. So two avenues where they're looking at. And as you mentioned, Sharat, there is also the stable coins. Stable coins are there. And depending where you look around the world, some countries are already open to stable coins, and they are comfortable with having, for example, the US dollar being issued possibly at some point in time by the Fed in a form of a CBDC. But if some commercial banks want to issue themselves stable coins with the right reserve against these stable coins, it sounds like some markets are open to that. So there will be a competition for CBDCs with stable coins, and I think that's really beneficial. Some other countries are closing the door to that. I think at the end of the day, the people will find their way, and it's better to remain open. But there is a lot of activities, and what CBDCs are bringing is essentially renovated and fair access to the FinTech ecosystem of any countries. Finance is usually managed only by banks, mostly by banks, by a few payment companies, and these FinTech industries have been pushing the industry forward. And if you can move everyone to a new kind of settlement system and new kind of infrastructure, it's going to give a fair access to everyone. So I think that's one of the big opportunities. The other opportunity is also to get some kind of live data about your economy. As a central banks, you've got the opportunity to, with your CBDC, to know where is the money going, how is the money being used, and that's really a great opportunity to understand and support more the economy in a more efficient way. And if you look at situations such as the pandemic we are all going through right now, central banks are trying to support their economy, but in a way they always get information with a quarter, 2 quarters, if not more, of data coming later to them. So that gives a much more reactive economy in general. There is many benefits, and I think CBDCs will probably compete with stablecoins, or maybe leave aside for some time. But that's really interesting to see how this history of the new kind of money is written before our eyes right now. We are very, very lucky. I'm not sure my parents or my kids will have the same chance as we have today to see this fundamental of the economy, money, being reinvented. It's a very precious time, and we should enjoy it as much as we can.
I think this is one of the biggest reinventions of money, and everyone would look forward to how it can transform cross-border payments and how it can drive financial inclusion. So at this point in time, let me bring in Gaurav and seek his views. What are some of the measures he, as a business owner, is adopting in terms of ensuring compliance with respect to regulations, let's say KYC, right? Because there's a lot of talk going around money laundering and whether you are onboarding users the right way or not. And just taking a leaf out of Jaideep's statement that how we can bring in more sanity to the legal process, right? How we can onboard users the right way so that we can keep bad actors at an arm's length. So Jaideep, Gaurav, your points on how you are taking care of the regulation as far as onboarding users are concerned.
Talking about Cashaa, we are a banking platform. We are not a crypto exchange by ourselves. So, and if we talk about customer onboarding, I think our own customer onboarding process, like if we are giving a bank account to an exchange or to a wallet or to a blockchain infrastructure, we go through the same due diligence process which any bank goes. In fact, we work mostly with our correspondent. So for example, in the US, our correspondent is JP Morgan. Now, when you are working with the same ecosystem which banking is, it's you basically all the rules which has been made for any financial infrastructure applies also on us. And then what we have seen is that statistically, I think we have more than 200 crypto companies and exchanges who are currently our customers, which includes almost every big name in the industry. So in terms of transaction wise, I think more than 20 to 30% transactions which happens in crypto today, it goes through one of our customers, and their end users are doing. For example, if we take in India, almost every exchange is our customer. So, and obviously as a bank or as a banking platform, we do a lot of regulatory stuff, and we, at a time to time, we do keep check on the customers which we have. Let's say a customer A or a customer B exchange, we do ask them what's their KYC process. Sometimes we do a random audit on them. We ask them randomly, okay, you please send us the KYC documents of all these transactions. Many of these things which the existing bank don't do. And that's why I think there was a report which was very clear that if you see the malicious transaction, or let's say the bad transaction related to money laundering, which happened through crypto, is actually only the 0.5% of the total crypto transactions which happen. But if you compare it with the banking industry, more than 2% banking industry transaction which happens for money laundering and terrorist funding. So if we not speak just on the assumption, if we go on the data which we see, it's very clear and evident that existing banks are much more involved in any money laundering process or any kind of terrorist funding, and at the scale is large as maybe bigger than the GDP of India. So we are talking on that scale. So definitely we need to take a lot of work, and especially when you are working on CBD or any kind of public infrastructure, it becomes more easier to track. It becomes more easier for us as a bank to look that, okay, if you have received a payment and you have done a crypto transaction, where that crypto transaction sits. If it's on an Ethereum chain, you can easily pass the hash, and like we use one of the product from Ethereum, it's CodeFi. Correct me, Charles, if it is wrong. So the Ethereum have the CodeFi product, which we have made compulsory for every exchange which they are making, that if they are doing a US dollar USDT transaction, if they're doing an Ethereum transaction, they have to take it through, so that we collect also the on-chain analytical data on these customers. So as a banking platform, we are not just doing banking, we are getting all this data. We are seeing what kind of addresses are, we are blacklisting these addresses. So when you talk about transparency on the crypto, we have much more transparency than the funds which we receive from the offshore accounts of our customers. We have to go through the manual documents, which sometimes could be right and could be wrong also. So as a banking platform, our job is much more easier to actually monitor our customers' crypto transaction than the regular banking transactions.
Thanks, Gaurav. And I think most of the exchanges and crypto entities are already following the existing compliance rules. The government should step in and bring in more regulatory clarity on that, how they can be regulated. And I think that's my own personal opinion, is that maybe bringing all crypto entities under PMLA, Prevention of Money Laundering Act, can be one of the ways where you can bring in an extra layer of compliance and due diligence. Now, at this point in time, let me bring in Pranav.
I think FATCA have already done this work for all the countries, that it's not an option for any country to decide that. If you are a crypto exchange or if you are running, you have to have a money laundering measures in your system. And as a regulated entity or as a banking platform, it's our responsibility. If we are giving an account, we do check on this.
So at this point in time, let me bring in Pranav and seek his views on how the ambiguity in terms of regulation, how is it going to impact the investment sentiment, right? Because we have more than 6 million crypto users in India and more than 300 startups and entities working in the crypto space. How do you see a complete ban, or let's say just RBI digital currency, so to speak, will kind of how will that play out in terms of investments, and what will be some of the focus areas for investors in as far as Indian space is concerned?
I think this is a very nuanced question. So let me also give a very extensive answer to this. So let's break this into short-term, medium-term, and long-term impact. So let's start from the long-term impact perspective. Now, this is like a global phenomena, and which is scaling, so much of institutional support, bunch of startups, genuine startups, best of the talent globally working in this space. People who have built successful enterprises, serial entrepreneurs, etc., getting into the fray, putting their hard-earned money and most importantly the precious time of their life to build genuine protocol startups which can create, I would say, inclusive and collaborative ecosystems. So I think it's a train which has left the station. So in that sense, from a long-term macro point of view, this is inevitable. It's almost creating a. So I think when Thomas Friedman he wrote that book on globalization, and of course it became a very celebrated book. He was talking about how the borderless world what we created. So I think it was largely about travel, platforms, etc. But now this is also about exchange of value. So if the internet is going to be present, let's say in Timbuktu or Rwanda, or I'm just taking some names of countries, or Russell Khema, etc. So it's going to be eventually exchange of value is going to happen one way or the other. So from a long-term macro point of view, it's bullish for everyone. Everyone is going to get a chance to participate. From a medium-term perspective, it's going to be very localized phenomena, because it depends upon which country you come from. Let's say if you look at India, I think largely the concern, my sense is, the government could have is that there's a systemic risk, and there is of course a money laundering risk, which has been expounded in detail in this forum. But systemic risk is also very real. If let's say you have a large country where, let's say, large number of people are still not included in the banking system, into financial ecosystem in many ways, this could create, maybe this is a two-step journey. First is having a CBDC and then opening up to various other currencies, and then seeing that creating boundaries so that the money flow does not happen in unbridled manner outside the country, right? From a short-term perspective, answer is definitely it's going to be challenging, because the retail investors are going to definitely back off. Institutional investors definitely were never into the fray in India. The family offices are going to slow down, etc. I'm sure many people will also look at potentially moving out of the country, etc. So I think all those things will happen in the short term. But I think my sense is people who are genuine builders, who are doing great stuff, and like most of the people in the panel, I would say all the people in this panel here, for example, I think who are long-term believers in this space, who are long-term believers in innovation and ability to participate, a borderless world, etc. I think this is inevitable. So I think the larger responsibility on us is to all of us is to come together and create a possibility for conversations, dialogues, and also creating self-governance, so that we are able to, build better conversations with government, regulators, etc. So this conversation, what you actually built this whole theme around compliance, KYC, ML, was a very enriching conversation. It actually, I'm sure if there is a regulator who's listening to this, would realize that, hey, they're like a bunch of people who are doing the right things and much more. So I think just a question of, getting these conversations out to the right audience, and them experiencing that, hey, let's create a mechanism in the short term for people to participate, so that the long term can be a seamless journey for all of us together without any stress, strains, both for investor fraternity as well as builders, people who are building amazing startups.
Thanks, Pranav. And I think you spoke rightly about the self-governance or self-regulation, where all entities in the crypto space can come together and they themselves follow the right rules. So what I would also like to bring in Jaideep's perspective here about what he thinks about some of the investor protection laws. Do they need to be redefined for cryptocurrencies, or they can be reused in the same form? How the investors' rights can be protected?
Sure. So to some extent, the current regime does protect investors, because you have the Consumer Protection Act and you have criminal laws like the Indian Penal Code, the Prevention of Money Laundering Act, etc. And if you look at some of the major Ponzi schemes and frauds which have happened, like the Gain Bitcoin scheme by Amit Bhardwaj, that was prosecuted under the Indian Penal Code and various other laws like the Price Chits Act and the Maharashtra Protection of Depositors Act. So it's not that the current regime is totally toothless. And if any consumer has a complaint on, say, the level of service provided by an exchange, they can file a consumer complaint under the Consumer Protection Act. And the new act is quite sound and robust, and compared to the older act as well. Having said that, there are further tweaks which we feel can be done, because these are generic laws. They will not, for example, successfully compensate an investor if there is a fly-by-night operator who makes off with the funds, because they don't mandate that there should be some reserves held or that there should be any kind of insurance. So that's why we had actually recommended some kind of licensing regime. Kumar's entity is obviously licensed, I believe, under the cooperative banking regime. But a generic crypto exchange is not necessarily required to be licensed by any financial sector regulator. So it would be good if a licensing regime is introduced, like this, a similar framework to, say, a prepaid payment instrument provider or a payment system provider, where there are certain net worth requirements, there are certain reserves requirements, KYC requirements, insurance requirements, fit and proper criteria for the management, etc. And that will prevent unscrupulous players from entering and ensure that only responsible players are around.
Thanks, Jaideep. And one question I would like to also bring in here is, since the RBI is talking about the CBDC, what are some of the risks of disintermediation and how they can be mitigated if at all RBI goes ahead with let's say a wholesale CBDC or a retail CBDC?
Is that to me?
Yeah, Jaideep, your views.
Yeah, so if it depends how they structure the wallet, because if you look at CBDC as an extension of paper currency, to hold paper currency, you don't need any bank or financial institution behind that. You are directly transacting, and the Reserve Bank of India has taken liability for the note. So if there is a CBDC in a way that somebody can hold a wallet directly with the Reserve Bank, that would obviously disintermediate financial institutions. But whether the Reserve Bank wants to kind of take on such a burden where it will be responsible for that ledger and monitoring that ledger, etc., is a question. So they may in fact give that role to the banks, and then the banks would still have a role to play, and such as flagging suspicious transactions, etc. So so far the RBI has not come out with any details of how it plans to operationalize it. I think they're still exploring the feasibility. But yes, if the new bill comes to pass, as far as the official digital currency part, then there could be it could be operationalized. But how it would be operationalized, we'll have to wait and watch.
I think most of the central banks are looking at interoperable CBDC so that they can facilitate cross-border payments in an efficient manner. And I think Charles would agree with me when I say that interoperability will be key to one of the design choices for CBDCs.
Yes, absolutely. You want to be interoperable within your existing systems, should they be RTGS or any national system. But you also want to be able to transact within your with your peers. So every central bank is looking at which type of technology or which bridges you can build to make sure you get this access. And to come back to Jaideep comments on retail CBDCs, I think central banks probably wants to keep the banks within their ecosystem. There is no reason for them to jump into being responsible of all the citizens' wallets, for example. And what we see in China for the retail CBDC is really some kind of hybrid solution where the CBDC has the same characteristic as a banknote, like physical money, but it's totally digital. So you can move it from one wallet to another, but it's always linked to a bank account at some point. And something people have not yet captured totally, and this is really, I think, the kind of killing features of CBDCs is this aspect of programmable money. So you will be able to design, let's say, Hong Kong dollar or Indian rupee or any currency, and try to give some rules to this money. Like this money is supposed to be spent only for your health expenses, or is supposed to be spent only in India or only in Hong Kong, for example. So there is also a challenge for central banks to design a new type of money, which will create and trigger a migration to a new infrastructure. And the reality today, if you look at what the FinTech have achieved, and I think India is a great example, and there is many other countries also, where actually finance is working fairly okay. You can still optimize things, but the challenge is to bring value to the central banks with the benefits of CBDCs, and also to the user. You need to design a product. You need to design a CBDC which will really trigger a move to a new infrastructure, and automated KYC and AML, programmable money, cross-border payment within all the compliance regulations and constraints you might think of, are something which is really hard to reproduce today within the existing financial infrastructure, and which will really make sense for central banks to really deep dive in. The new money should not be only faster, it should be smarter. And I think we are still at the beginning of investigating what the technology can bring, investigating what means directional money, what means programmable money, and what it brings to the ecosystems and the stakeholders.
So Charles, I would like to seek your views on how do you see both DeFi and CDeFi, centralized, decentralized finance, coming together, and how do you see the adoption of enterprise DeFi in the coming years?
That's a great question. I give you two examples. Some of the leading DeFi protocol companies today, such as MakerDAO and Aave, few people have noticed, but these two companies have acquired financial license with regulators either in the US or in the UK. So I think today these two worlds are really operating in separate kind of universe, but they will be merging for sure. And I would not be surprised that some of the banks and regulated entities, in some years, I cannot tell you is it in 2 years or 5 years. I'm not a magician, or I'm not able to put a timeline on this, but I think the infrastructure will be renovated the same way CBDCs have found their way into central banks. I think DeFi will find its way within regulated finance, and probably these two worlds will merge at some point because there is value, because there is automation, because there is transparency, because you can pool a lot of resources. So we have to give time to all these companies and big organizations to realize what it is. We see in Asia, in the US and Europe, some banks starting to offer digital asset custodies, some of them starting to offer stablecoin access, and some others. So I think everyone is starting his journey, but it's definitely merging, and it's not going to be one world or another. I'm much more a supporter of a convergence kind of theme, where these two worlds actually will find ways to operate together.
I think regulation will be the right driver for adoption, and both in DeFi and CDeFi as well. So let me come to Gaurav and seek his views on the need for financial literacy, especially for crypto products, right? How we can make the common man on the street aware about what are the right choices about investing in the right crypto products. How one can drive that? Gaurav, your views.
Just reading, I think people have to educate themselves. Definitely, the retail firms who are in the space, they are doing a lot. We just did a JV in India with the United Multi-State, so that we can also have physical branches in India, so people can get the same feel and touch. And most important, when we talk about Indian market, it's a different market than the where we were operating before. It's US or UK or Europe. Here, people still coming from a taboo where we need to have a physical presence. We need to have seen in front of you. And it's not wrong. It's just how the culture in the country is. If you see, even after demonetization, the cash circulation in the country have increased instead of going down. So definitely the digital payments are going up, but the cash is still in the country because of how the whole country has been organized. So yeah, different companies, but there is no like one pill which you can give to 7 billion people and they will be next day get enlightened with the cryptocurrency. They have to go and read. My only advice is just don't invest in something because others are investing. Try to read it, try to understand it. There are firms, first rule in any business or any crypto is that if something which is over promising, you have to be careful. You have to read in it. So if we just talk about the Indian scenario, I don't think anyone have lost any money in legitimate cryptocurrency. They have lost money in scams, which actually had nothing to do with cryptocurrency. They were just the name of crypto. So no, it's going to be, Jaideep knows much more of these companies because maybe his clients keep coming to him. But if you see every transaction where the police have to be involved, there was not a legitimate crypto transaction. It was something which is on the paper. And that's why I really encourage the move which Indian government is taking, so that we can have not the blanket ban on crypto, but a blanket ban on these scams. because they are bringing just the bad word for the technology, which is really innovative. It's a new money which is being designed, not only programmable, it's smart, and most important, it's something which cannot be faked. Today, even between the banks, we have sometimes transaction goes and we find out that the correspondent banks just lied about the transaction. We come to these kind of scenarios. So having this kind of money in this really interconnected world where everything is just digital and everything is smart, we really need a smart money. Maybe it not need to be used by the consumer directly, but at the infrastructure level, we definitely need it as of today.
So we are coming towards the end of the session. We have just 4 minutes left. So I will ask Pranav to share his closing comments about what he thinks about the recent announcement by Jack Dorsey and Jay-Z about setting up the We Trust Fund and how India can make the most out of it. Pranav, your thoughts?
I think this is just the beginning, and many more such trust and funds etc. will come, and some of them will be motivated, some of them will be very agnostic money. So I'm not going to comment on very specific funds because there are different angles to it. But I would say that this space is exploding because this is a good intersection of innovation as well as value, right? And just want to pick up on the previous question that you asked, Gaurav. This is very much similar to asset management industry in India. I still remember that when I joined very early on, mutual funds were called as a scam. And practically SEBI sort of evolved and understood the regulations, and a lot of course asset managers were pulled up. They paid fine. So various things like, for example, Chinese wall between research team and the investment team, these things are like international norms, but they came into being over years. Then of course, there were other bodies, industry bodies which were set up. So I'm saying there was a point at which internet was considered to be banned. There was a point at which, PCs, computers or laptops were considered to be banned, extremely high duties, etc. So I think we are just going through a cycle right now. So the reason I think all of us are at ease is because we are all genuine people, authentic people doing the right things, getting people to participate, getting people to, create value. And I think my limited, closing remark on this would be that if there is an audience which sort of, senses that, hey, this is going to be banned, so why should I touch it, etc. I think in a way, what they are missing out is participating into the future. And there are a lot of intelligent people who participate, sort of creating trust, buying in personal capacity. The Elon Musk, people who are inspiration for youngsters, etc. on one side. On the other side, you have these, young people coming together, creating protocols, creating value, global companies, funds globally participating into it. Then of course there's a massive opportunity for government to earn revenue on taxation, right? And then India can become the back office of blockchain, like the way TCS and Infosys ushered a boom in India, or what Flipkart could do, or to the e-commerce industry, or this whole sharing economy, what happened. So I think there are multiple facets to it. So my closing remarks on this would be very simple, that let's participate, let's create a framework in which all of us can create I would say umpteen opportunities for Indians, and take it forward from there.
Thanks, Pranav. And I have got 5 more minutes. Got an extension. So what I can do is maybe ask everyone, all the panelists, to share maybe one line as their closing remarks. We can start from Charles.
I will say that the regulators will regulate. It's not always the negative things. It goes up and down. So some quarter you feel down because your regulators have not done exactly what you were expecting. But eventually they will probably tax this economy, and tax will be a good sign that things will keep progressing. And also try to not look only at the whatever asset price movement, but look also at all the army of engineers reinventing their career, the army of entrepreneurs reinventing economies, businesses with this technology. It's really mind-blowing, as much as the internet was mind-blowing some decades ago. And the internet got the same kind of rocky path before it gets like full adoption. So we just need to be patient, resilient, keep doing the right things, and not looking only at short-term gain, but looking at how you can grow the people, how can you can bring them access, and every time you can bring an engineer to the world of blockchain, helping him to understand him or her. Understand smart contracts, how a distributed system works in general. That's always a gift because I think it's going to keep them busy and well busy and help them to upgrade their career for many years. So feel free to just bring and educate the teams if you are an entrepreneur or a technologist, so everyone can be part of this and be patient. I think there will be peer pressure also. So I feel a bit of tension right now in India. You seem to have a question mark on what will be the regulators' view, but there is some really good things coming at some point in time. So patience and resilience as the technology is.
I think the keyword would be patience and resilience. Jaideep, your thoughts, please.
Sure. I'll just make 2 quick points. One is crypto is not just about trading, contrary to popular perception. There's so many applications. UNICEF has used it, the World Food Program has used it. It's not just a hotbed of speculation. There are genuine applications built on it where the most talented software engineers are working on it. So that is one aspect that regulators should keep in mind, and that blockchain possibly cannot succeed without a good crypto ecosystem. The second thing is, I've seen some outrage on Twitter, etc., about the new law, but real participation has to come with genuine engagement with government and MPs, etc. So people should kind of genuinely reach out, whether it's by whatever means available they have, and make their point across, whatever their point may be, whether it's for, against, or in between. And that will give a more kind of informed perspective to the lawmakers.
Thanks, Jaideep. Gaurav, your closing remarks, please.
It's just, I think Jaideep and Pranav already, talked everything. So I think what's happening in India, just because it's very India focused, what's happening in India is very normal. That's a process we have to go through for every industry. Also, the regulators evolve over the time. The SEBI, which we see today, was once upon a time was a dummy organization with almost no power. They were just having as less as like any common organization which cannot do anything, even if they can see there is a scam going on. So regulators also evolve, they learn. So it's not the regulators are just living in the cage. They are also learning and evolving, and the same how SEBI have evolved for the mutual funds and other things. I think the regulators will learn and evolve, and we will have a better crypto regulation. It's just it have to go through this process, what's happening. So this is not something to be afraid of. We have to understand the technology is a revolution. There is no doubt about it. And the closing remark is just buy some Bitcoin and crypto.
Yeah. Thanks, Gaurav. Thanks, Pranav, Jaideep, and Charles for sharing your thoughts. And I think this has been a great discussion. Thank you, everyone.